Well, good morning or good afternoon, everyone. Welcome to Trading a Smaller Account. Every Monday and Friday, we link arms together and we are talking about the markets. And this is kind of an anything goes kind of class. We are talking about buying stock. We are talking about predominantly short-term trading strategies in this class. I'm just bringing the chat back up. We had to kind of do, I had to do a little revision here. So let me just get this going. Here we go. So that I can see the comments as they come in. Okay, we're good. So today we're going to talk about a couple of different strategies. We are going to talk about an iron condor, which is I like to think of it as a credit spread sandwich. We are going to talk about a short put vertical, which is a kind of sort of bullish strategy. And then we're going to buy a stock with the intention of buying and holding it according to a certain set of rules. I've also been asked some questions in the surveys and in the comment section when people are watching the archives, and I want to address those. Somebody's saying, let's sing Kumbaya. And all I can say is there are many things that I'm fairly proficient at in life. Singing is not one of them. I do not even sing in the shower, my friends. So that I'm not going to be doing. In any event, I love that so many of you are in here ahead of time, kibitzing with one another and sharing ideas. And, so if you can come live, I encourage you to do that and come a few minutes early so that you can participate in the chat. Thank you guys for bringing it to life. We've got Josh and Will and Riceberg and Mike and Sia and Christine and Arista and Mo and Lisa and Carol and the rest of the gang. We also have Connie Hill with us in the chat today. And Connie is a friend and fellow coach and understands all the strategies we're going to talk about and has taught them for far longer than I have. So if you have any questions, don't hesitate to ask. John the Noble Savage, I responded to your first comment. So if you scroll down, you'll see that. We in this class trade very much according to a very, very specific set of trading plans. And there's a reason for that. And we're going to talk about that as we kind of go through things. But let's get through our important information so we can get right down to business. If you are not following Connie and I in the land of X, you'll want to do that. Connie Hill CS is her handle. Barb Armstrong CS is mine. Okay. And just before we get into the thick of things, I want to remind you that options carry a high level of risk and aren't suitable for all investors. You have to meet certain requirements to trade options with Schwab, and not all will qualify. We use the Paper Money software application on the Thinkorswim a desktop platform. And so if you are using a different version of that platform, my screen will look different than yours. So you may want to download the desktop platform, but it is a brilliant place to learn when we're using Paper Money to make sure that we understand our trading plans and understand a strategy. And we've traded it enough times that we are very, very comfortable and know what we're doing, whether the trade goes for us or against us. Before we consider trading it in our live account, there are some nuances and differences, and I'll talk about that as we go along. One is that short options will never be assigned early in Paper Money. That can happen in a live account. So we started our year with 25,000. Our max position size is 5,000, and the max risk per trade 500. And our focus in this class is primarily on the short to intermediate term time frame. If you are a beginner in the world of trading and at the front end of your learning curve, this class might be a teensy bit like drinking out of a fire hose, but keep coming back and it will become clearer. There are a number of introductory level webcasts taught throughout the week. Kevin Horner does a Getting Started with Stock Investing. I have passed on the baton to Cameron May, who's now doing the Getting Started with Options. We have kind of traded places because I'm doing Getting Started with Technical Analysis. So I'd recommend all of those if you're new, or if you just want to tune things up a bit. If you think you've been getting maybe a little bit, I don't want to say slack, but if you could use a bit of a tune up. And I think that school is never out for the pro. And we trade both bullishly and bearishly. Like, back in 2021, we did very few bullish trades and most of our account was sitting in cash. And yet we still had a very successful year by trading short strategies. Well, in trading short-term time frame strategies in a bearish way. Last year, we didn't do very many bearish trades because the market was pretty bullish. So we look at what's going on in the market, and then we're trying to look at, examples of how an investor might trade given what's happening in the current market conditions. So let's get out to the platform. We're going to have a super quick look at what's going on in the market in general. Spoiler alert, we may look at, we will be looking at Dollar Tree today. Okay, so, the S&P hit a new all-time high again today. I've got a 3-month chart up here because I was looking at something, as I say, up close and personal. But, the market has had an extraordinary last year. I mean, even today hitting a new all-time high, up 26%, hit a new all-time high yesterday. So even though we had this kind of pennant pattern or consolidating pattern happen throughout the month of December, where Santa refused to participate and put a rally in our trading stocking this year, the market's been pretty darn bullish. Or, especially if we're looking at the S&P as a benchmark. When we look at the NASDAQ, which is our tech-heavy index, no financials, again, we're not hitting a new high today, but we're within a stone's throw of it. And, up 25% in the last year. Again, this consolidating pattern broke out to the upside in the last week. How about the Dow 30? Now, this is different than the other two indexes in that it is based on the price of the stock. So if something has a stock split and it's in the Dow, its influence on that index is, adjusted accordingly, which I think is kind of nuts. But you know what? No one asked me, right? That's the way it goes. But, with the Dow, up a paltry 18% in the last year, 17.8. And, all of these indexes were up first thing this morning, looking like it's just pulling back a smidge now. But who knows, where we'll be, by the end of the day. Yes, we are going to, somebody has asked in the chat, can we review the short call vertical on Nike? That's one of 3 trades that we are going to be looking at today. Yes, we're reviewing those. Yeah. Yep. Okay. And the Russell, you know what? Diagonal resistance breakout. And how much is that up? It's, up 18%. So the Dow and the Russell are in 3rd and 4th place, but still that's not too shabby. And where is the VIX? Sitting at 14, under 15. So it's in the lower half of where it has spent most of the last year. And so some would say, hey, that's pretty cool. I love seeing all these Canadian flags. Is somebody living in Calgary? They're calling themselves a cowgirl. My son is in Calgary. I have one son living north of the border. Okay, so let's pull up our sector indices. And again, if any of you are here for the very first time, feel free to type a greeting into the chat so that we can, welcome you to this trading community. It's great to have you on board. So consumer discretionary has been the strongest sector in the last 3 months, followed by communication services and then financials, which has been really cutting a rug lately. And if we click on these, we can see here's an index up 37%. So it's been leading, which makes sense, outperforming the S&P and the NASDAQ. The communications up 37% in the last 12 months. financials up 33, and we saw this pullback. The whole market seemed to pull back, but diagonal resistance breakout in this financial sector, and then it's been on a tear ever since. It's interesting because you look at this is the one with kind of like the most ups and downs, so it's the most angsty, I would say, and yet very, very heavily traded, and the tech sector makes up almost half the NASDAQ. So welcome to all the first timers. It's always great to see, so many new people joining us, finding us, and coming back. So 4 weeks in the last month, who's leading? Well, energy has had a bit of a turnaround, but it's still in this big fat sideways range, so that could be falling off that pedestal. Industrials, making a run for it, and financials, of the 4 that were on the podium for over the last, 3 months, financials is, maintaining its stature at the top of the heap, which is just kind of good to know, especially if you're just starting out and you're going, well, where do I even begin? Like there's 500 stocks listed on the S&P. There's like 12,000 stocks listed on the American exchanges, or over 12,000. Okay, so let's go back. Let's start, and we'll kind of go, maintenance. We'll look at what we've got, because that's a critical part of investment strategies, right? 1 is knowing how to place the trade. 2 is knowing how to manage it once you've gotten in. And so a lot of people have been feeling a teensy bit angsty about this trade that we put on Nike. Okay. And we've got about a dozen or so trades, which is kind of light for us on the go right now. So we did this short call vertical on Nike. We're down $189. Okay. And the idea with a short call vertical, if you're new to short call verticals, is this stock has been on the struggle bus, right? It has been downtrending. So this is a bearish strategy, which is counter to what is going on with the market in general. So I think this is the only bearish trade we have going on right now in our portfolio. And it had come down, came up for 1 day. And on this day, we said, you know what? It looks like Nike's going to continue to downtrend. And so we put on this short call vertical. So with a short call vertical, just for those that are new, and this is an intermediate to advanced class. I'm just trying to bring out my drawing tools here. Okay. So we're looking at it on this day, and we're saying we believe, based on the technicals, that this is going to stay below $74. And our expectation was that it might come up and bump its head, but that it would likely continue to downtrend. And then we put it on Monday, Tuesday, Wednesday, Thursday. When I looked at it yesterday, it was actually a red candle, and then it rallied by the end of the day. Now, today we have this, actually, from a candle perspective, this pattern is called a bearish harami, which means, and it's still a live candle, so it could change by the end of the day. But this bearish harami means that today's candle is totally inside the body of yesterday's candle, and it's bearish. And at a potential resistance level, i.e. the 30-day moving average, this can be a bearish sign. Now, we position sized to make sure that if this trade goes wrong, goes south, it's funny because I always think of north as up and south as down. So if it goes north, if it goes up and we take our max loss, then we're not blowing up the account. And I had written in my notes, let's just get out of this because it's not going the way we envisioned it. And then I look and we have this bearish harami. So we'll look again at this briefly on Monday. But it could come back down enough that we could get out with less of a loss. So we're looking at it. We're aware that it's not going according to plan, but we're going to let it continue to percolate. Okay. Okay. So let's now go and look at something new. So let's look at kind of what I call the sister strategy to this. So and that's a short put vertical. Okay. And Manuel, I see your question. I'll answer it in a minute. Actually, Connie, if you could go out to the trade management mini sessions and pull the how to customize watch lists for me and post that in the chat, that'd be great. Okay, so we are going to look at, because we had this kind of bull pattern happen on Microsoft. And then on Morgan Stanley. And then it broke to the upside, and it's been kind of like old resistance looking like new support. And so the idea here with a short put vertical, where we're selling a put and then buying a put below it in order to define our risk, is that our expectation is that it's going to move to the upside, or at least that this support level is going to hold. So if it goes sideways, we're happy campers. If it goes up, we're a happy camper. The only way that we get into trouble is if it goes below both our strikes. And then we could end up with a max loss. It's kind of like a cup and handle, although usually with a cup and handle, it's usually the cup and then the handle. It's like a reverse cup and handle. Somebody's saying, is this a cup and handle? But it's, it looks like it's consolidated and then broken out. Where it hung out here, this resistance level for a while, and then came down and then came up and broke through it. And we had an earnings event in here too. And so you might say, oh, well, like, what was the consensus on earnings? Well, I'm glad you asked, because I have this live news column up here. And so we can kind of come out. The financials have been killing it. And this is one of those ones that came earlier this week. So they raised their price target to 153. B of A, Barclays raised it to 156. We're sitting at 138 here. HSBC raised the price target to 140. UBS raised to 140 from 130. DBS raised it to 150 from 135. So I'm not seeing anybody here, although the targets they're placing are not all the same. Like Evercore went to 150. So that's saying, hey, we've got some room for growth here. And, we've got, 13,000 sitting in cash. Could we buy the stock? We could. Or could we look at, another way of trading it? And another way might be to do that short put vertical. So if we come to the trade tab and we come out to February, 28 days, the advantage of looking at the monthlies when you can is that they tend to have more volume. So here we've got, we're looking at this 135 strike, 700 contracts. We're on the books when the market opened today. 142 traded today. And the probability of it being in the money at expiration is 62%. That means we've got a 68% chance that if we sell this strike, it will expire worthless. So we're looking at, if we sell this vertical at say 135 and 130, what would we get? We get $1.08. And what are the odds, probabilities of it going below 130? 15%. And so if we look at this and we say, okay, if we get $1.10, what are we risking? We're risking 390. So $1.10 divided by 390. Our rule of thumb is that if we're in this for 28 days, we want to get at least a 28% potential return on our risk. And we're getting exactly that, 28%. So that meets our criteria. We're going to go to single order, first trigger sequence, right click. And our example trading plan, and you may say if you're new, example trading plan, like I haven't seen that. Where is that? Well, I'll show you in just a sec. I'm going to say when this is worth about 20 cents, when we've got about 80% of our max gain, or maybe make it 21 cents, that we'd like to buy it back and take our risk off the table. Okay. Confirm and send. So how much could we lose? 392. That's our theoretical max loss. How much could we make? 108. And you may say $108, like that's not going to fly me to Tahiti to drink something out of a coconut. No. But you know what? It can buy a few groceries, or you know what I mean? Like it's still money. Like we call this a base hit. Little win, little win, little win. You can do a couple of these in a week, that starts adding up. So we're going to put that in our short put vertical bucket. And how often do we manage these? Well, we're going to look at most of our short-term trades daily. And how long, if you're going like, oh, wow, like how long is that going to take? Okay, let's review our short put verticals. We have 4 of them. We've got 4 short put verticals, and are any of them close to 80% or over 100% down? Well, but TTD, Trade Desk, we're down 67%. We're up a little bit today. What are our strikes? 120 and 118. So that one is hurting. Lulu is looking, like it's rolling along just fine. And the other 2, well, Morgan Stanley hasn't filled yet. We're waiting on that. But not a lot of time has been spent for us to review that, right? And here's TTD. So we're just above our short strike. So we wanted to stay above 120. It deep just below it. And today it's back above. So we're going to just let that percolate. Okay. Okay. So there's that one. So we've done a review and we've placed a new trade. Okay. So we've done this one. We've done this one. Okay. Let's come and look at a bank, because financials have been crushing it in the last month, NESPA, and the last 3 months. So here's the Bank of New York Mellon. So what might we want to look at? Well, this thing just gapped up on earnings and kept on running. And so it beat on earnings. What are the analysts saying? Well, if we come over here, they raised their price target to 94. It's sitting at 86. That was UBS. Morgan Stanley maintains an overweight. They've raised their price target to 97. Barclays raised their price target to 104. B of A to 95. So they're all raising price targets. So that's kind of bullish, right? Seaport raised their price target. Now, does this mean like, okay, I should like buy with both hands? Yeah, not necessarily. Because in spite of their analysis, news could come out and this thing could tank tomorrow. So how do we both position ourselves to take advantage of something that might be moving to the upside and protect ourselves should the unforeseen happen, and do it in a way that doesn't blow up our account? And so, what's our rule? We can't invest more than $5,000. Could we just buy this stock? And why might we do that? Well, if we come to the Analyze tab, if it wasn't obvious, it's in the financial sector. We can read something about it here. It's headquartered in New York. They've been around a hot minute. They were founded in 1784. Okay. And when we look at things, their earnings per share up 33% last year. Their sales per share has been going up every single year. Another interesting tidbit we might want to look at is on the trade tab. And if we click this little thing, it says, okay, it pays a dividend. Now, here's one of the differences between paper money and a live account, is that in a live account, you actually get paid the dividend. In a paper money account, you don't. But we're kind of pretending this is a live account. The other thing is that even if it pays a dividend now, there's no guarantee it will continue to pay a dividend. And if it, decides not to pay a dividend, that's not good news. But it pays a dividend of 2%, which I like to say beats a poke in the eye with a sharp stick. And the price earnings ratio on this is also 14.8, which means for every, let's round to 15, for every $15 you invest in this company, it generates $1 of earnings. So if an investor is looking for a value company, might they be interested in this? And some would define a value company as being a company where this price earnings ratio is under 20. So it's like, okay, checks that box, checks that box. When we look at it technically, checks that box. Analysts are having like a group hug over the thing. So maybe we add it to our portfolio. And, and if you like drawing lines on the charts, as I like to do, we've also had this kind of consolidation pattern set up. So some might call that a double bottom, right? And, from this double bottom, how much might you expect it to move up? Well, at least the width of this channel, maybe more. And some would say, well, why aren't you drawing your line so we can activate this? Put the line down here. Okay. So we're going to buy some shares. So we can buy how much? $5,000 worth. And we're going to divide that by the current price. Let's call it 86. So we could buy 58 shares. Can we buy 100? No. Why not? Because that breaks our rule. So we can buy, 58 shares. Where might we put a stop? Well, we might say, well, if we looked at this as old resistance, and we're expecting it to behave as new support, we might put our stop 3% below that. So we're going to buy 58 shares. I'm writing that down because I've got a great memory, but it's short. And then I'm going to take that 82, that drawing, that 82.22, and I'm going to multiply that by 0.97. So the stop would be at 79.75. We're paying 86 to get in. So that means we're risking about $7 a share. So if I multiply that 58 times 7, we're risking about $400. Now, are stops a guarantee? No, they're not. They're not a guarantee. Okay. So we could end up losing a bit more, but if we got out a little bit less, would that still be within our 500 max risk per trade? Yeah. So we're going to come out to the trade tab. We're going to right click. We're going to buy custom with a stop. Now, are we putting a target on it? No. We're going to buy and hold like we did with GoDaddy last year. So that is, what did I say it was? Oh, 79.75. 75. And we're going to hit this little paper clip and we're going to change this to, let's just make it 50 shares. I like round numbers for some strange reason. Okay. So 50 shares, we're going to make our stop, good till canceled, confirm and send. And we're putting that in our stocks with dividends. Okay. And you always want to read these little lines at the bottom. With stops, there isn't a guarantee you're going to get out at exactly the price you've requested. There are very few guarantees in life, right? Right. Okay, so let me just scan at the questions. Okay, so there was a question on where, how to customize the watch list. And so if you subscribe to the channel, and if you haven't, I don't know what you're waiting for. It's a free resource. Just hit the subscribe button. And when you first come here, you'll see what is currently playing. So that's why trading a smaller account is up. And if you come to playlists, then you'll see, all the classes that are regularly taught. So if you hit view full playlist on these trade mini management sessions, first, this Power of Compounding, if you haven't watched it, I would appreciate it if you would, and then let me know what you thought, and then feel free to share it. I'm going to do a part 2 on this because I've had some questions, and we're going to do Power of Compounding part 2. But if you scroll down to the bottom, there are all these little quick think or swim, how to customize the monitor tab, the watch list, which somebody specifically asked about, how to customize the charts, how to do an OCO order, all that kind of stuff. Okay. Then at the top, I'm very plan oriented. And there was a book written years ago by a guy named John Ray, and he talked about the differences between men and women, that women, tend to be more prone to ask for directions. Now that we have Google Maps, it doesn't really matter because, anyone that has a phone can find out where they're going. But women tend to be more rule oriented also. But I have created these example trading plans, and I will be adding to these on a regular basis. But these mini sessions, so we did a short put vertical, and here's an example trading plan, and it's just one example. And somebody asked me a question the other day. They said, I follow you and I follow another coach, and you always put an exit on your verticals, and this other coach never does. And that's the beauty of this, is that you can look at what one coach has to offer in a way that they do things, and look at another coach and maybe try them both, and then go with whichever one works best for you. I did a call at the beginning of the year, which is in the Trading a Smaller Account playlist, the 7 things I wish I'd known. And one is that hope is a 4-letter word in the world of trading, and so is fear. And so I find that my antidote to trading based on my emotions, and as much as I know that that's a really bad idea, it's really hard not to do that. And so these are my antidote to emotional trading. I have a trading plan, and for some traders, this is the trick that helps them avoid trading in their emotions. Now, for other people, you're just more disciplined creatures maybe than I am, and you don't trade, based on hope and fear and FOMO. But this is something that you can use. And if you have a trading plan and it's not working well for you, then you can always look at tweaking it. And that's what we did with our long vertical strategies, where, if I got in and wanted to make 100%, if that was possible, I wanted every bit of that. But I almost never got it. And then I thought, well, what if I went for 50% instead? So you can always tweak your plans, if you traded them in your paper money for a few months. And this is just an idea of what a trading plan might look like. You can do it however you like. Okay, so now I want to show you how to adjust a long call with a 1 ATR target. So we're going to go in and do that quickly, and then we're going to place another trade. So I wanted to do 3 different types of trades today. So we've done one where we bought the stock. We've done a short put vertical. We're going to do an iron condor. But before we do that, we're going to come and look at our long calls. So one we're up on, and that's kind of clipping along doing its thing, and one we're down on. And I wanted to look at eBay, and we talked about this the other day. So with eBay, we got in on this day, then it went up. Here's our target, and the original exit was down here, and we moved it up a couple of days ago to just below. It was below this day by, I think, $1 or 50 cents. We came within 9 cents of being stopped out. And today it was down, and I just thought, this is not going according to plan. Had I been following my rules, we would have adjusted our stop on this day to 50 cents below here, and we would have been out on this day. But I didn't do that. I took my eye off the ball. So here we are now. We were within 9 cents of being stopped out. At the end of the trading day today, or on Monday when we meet, we'll adjust this again. But if we have another red candle, we may just say, hey, time decay starts eating our lunch here. And the goal with these 1 ATR strategies is we're expecting to be in it just for a few days. Now, the other one that we had, it was Autodesk. And this one needs an adjustment. So we placed this one in the trading breakout patterns on Wednesday, which I treat as a companion class to this class. So if you don't have that one on your viewing menu, you may want to add it because it's a companion class to this one. So we placed that trade on this day. And with this 1 ATR trading plan, and there's an example trading plan in that mini session series, the deal is we move the stop up at the end of each trading day until it hits the target or we end up stopped out. So here's our original target, which is 1 ATR below the low of this day. And that's where we have the most risk. So we are going to look at this low, yesterday's low, which was $297.50, and we're going to move it up to $1 below that. Okay, so how do we do that? We're going to come to the monitor tab, working orders, look for Autodesk. We are going to right click, cancel and replace. We're going to come to our little sprocket and say this was 290.66. We're going to move it up to 296.50, which is $1 below yesterday's close. And so now we've taken, given where the original stop was at 290, we've moved it up 650. So we're trying to compress our risk or minimize our risk. Yeah. Okay. And if you end up taking a small loss can be a beautiful thing. It beats the stuffing out of a large loss, right? Right. Okay. So we're going to send that in. And this is our 1 ATR, and we've adjusted the stop. Okay. So I'm going to have to move quickly on this next one because time is clipping along. But Dollar Tree. Yeah, so somebody's asking, do you look at profit and loss to see whether it's working or not? Yeah, we do. And then if it looks like it's struggling, we may go out and look at that. Okay, but we can look at these long call verticals. They're all kind of clipping along. We can look at Nike. We've already talked about that. And then we look at these other two long calls. And so kind of at a glance, we get a feel for where we are. Okay, so this last one is Dollar Tree. Now, Dollar Tree, when we look at the bigger picture, it's been on the struggle bus. But since September, it's been trading kind of in this range. So could we do what I like to think of as a credit spread sandwich, which is just my nickname for it, but that is officially called an iron condor. Sorry, I don't. So if we kind of spread this out, let me just come in here. We're coming to our price axis. Okay. So when we spread this out, the idea is we're going to put a short call vertical on the top because it's in about the middle of this range. And then when I looked at the strikes, could we do this short put vertical at around the $65 mark? And so the idea here is that we're doing a short call vertical here because we believe it is likely to stay below 77. And we're doing a short put vertical because technically we think that the probabilities are high that it'll stay above 65. And so as long as it continues in here, we have a successful trade. Now, why do people like these iron condors? It's because we get paid 2 credits and we're taking the risk one time. What does that mean? Well, if we have, let's say, a $2 wide spread, this is a $77 stock, or, you know, a $71 stock. If we have a $2 wide spread on each side, we collect a credit on both sides, but there's no way that it could be both above 77 and below 65 come expiration. So we're taking the risk once, and we've got the credit twice. So that's what kind of makes these delicious, so to speak. So we're going to come to the trade tab. We're going to come out here to the 77. We're coming out to February 21st. And, you know, does this typically trade more than 1 million shares a day? It does. If we look at this 77 strike, do we have more than 20 contracts? We do. Do we have a tight bid-ask spread? We're good there. So we're going to look at selling, and we're going to sell an iron condor. And it will always take the smallest spread possible. So this is, we want it to be $2 wide. So we're going to say 77.79. And then on the bottom, we wanted to sell the 65. And then buy, to define our risk, the 63. So we're looking at taking $2 worth of risk minus 77. So that's 77 divided by $1.33. So that's, oops, I put in something wrong there. 77 divided by $1, that at 3, 23. That's a 62% potential return on risk. Does that meet our requirements? It does. How much are we risking? $1.30. So how many of these could we do? We could do 3. If we come to confirm and send, we're risking 369. Is that below 500? It is. You know, we could maybe do 4 and we'd be just over the 500. Let's see. 4. Confirm and send. 492. Okay. There's our winner chicken dinner. We're going to put in an exit and say we want to buy it back. Now, this doesn't mean we can't change our minds and buy it back earlier, but when we've got about 80% of our max gain and it's worth about 15 cents, we'd like to close it out. Now, we're going to talk about managing this, you know, in upcoming classes, but that's kind of our default. Well, now it's saying it'll pay us 83. So we can adjust this also. Confirm and send. Do we have an iron condor bucket? We do. Fire in the hole. Okay, so guys, as we wrap up, we are now officially out of time, and it goes by fast, doesn't it? So there's a survey today. So here's what I'm asking as a favor for you. If you click on that survey link, 2 questions. 1, I hated it. 10, I loved it. So it just takes a sec to fill it out. If you want to put a comment in, my promise to you is that if you fill it out, I will read each and every comment. So will my management team. It's a chance to say, hey, these are topics I'd like you to cover in upcoming weeks, or go faster, go slower. You haven't done this strategy in a while. Whatever you want to say, I will read it. Hit the like button. It helps move things up in the algorithm so more people can find this content. Let's Connie and I know you found this helpful. And subscribe to the the Trader Talks on YouTube. And last but not least, follow us in the land of X, Connie Hill CS, Barb Armstrong CS. Thanks to each and every one of you for investing in not only your current life, but your financial future by attending a webcast like this. Get out and hug someone you love. And thanks to Connie and the guys behind the scenes for helping bring this webcast to life. Take care, everyone. Have an awesome weekend.